Hello and welcome back to the Maverick Life channel. It's going to be an update focused mainly on the ROI side of things, but a little bit of Maverick Life as well. Um, so apologies for decreased output recently. Many reasons for that. Business here, very busy doing some consulting for Singapore-based hedge fund, which has taken up a lot of my time. And if that wasn't enough, I'm actually moving house. So I'm not buying the baller house that I shared with members of the Mavericks, but I am moving to a place not too far from here. I love the backyard here, but changes are happening. So on that note, just met with my accountant today and talking about different options if I wanted to finance a home. I'm not a massive fan at the moment of levering up like I did when I was in my 20s. I used some ridiculous leverage. And what I thought was interesting is the state of the economy here seems to be cooling off in terms of the housing, at least in regional Victoria, probably due to sentiment around legislative changes and the Victorian government you know what they're like. So I think you'll have less supply and incentive for landlords, and I think it's going to be a scramble for rental properties and for purchasing of dwellings still, because although the property market is way out of whack here, one thing just has not changed, and that's the supply relative to the demand. And I came across a question in the Discord channel by a gent that was saying just this and talking about how our situation here means that with the government just bringing in over 600,000 immigrants last year, which normally I would be all for to grow GDP, but we need the infrastructure to be able to handle that. This is just leading to more and more demand. The supply is staying static, and the new dwellings coming in the entire country due to come online over the next 12 to 24 months, I believe, sits around the 250,000 mark. So it's just, I mean, it's just insane. It's just going to continue to cause more and more pressure on the housing prices. What's relevant about the meeting with the accountant was that certain lenders, and at the position that I'm in, I'm fortunate that they will accept accounted draft figures, so that they'll draft up my end of year company returns, trust returns, everything as a group, put it together, and then they don't have to actually file it for the broker, the lender, excuse me, to approve it. They will accept an accountant signed draft and give me a pre-approval ballpark figure so that I can just go pull the trigger and know that the finance can come through, which I thought was was a little crazy, to be honest. And apparently, it's not just one of the big four banks here, but apparently two of them are looking to do it as well. And so it's super interesting. And so stay tuned. I'm moving and then maybe moving again. Who knows? But I'm used to moving. So that's no big deal. I thought I would get stuck into just a few ideas here. The portfolio performance, for those of you who follow Crassus Investment, the portfolio here is sitting at 0.66 up for February, down basically 3% for January. If you can't handle this volatility, seriously, don't copy it. This is exactly how it's going to go to be. I see, because I'm playing for 18, 24 months time um, in plays where I think I can get multiples of return on capital. So as I've explained before, I believe probably the best options there are in the offshore oil space and some major oil producers as well. But I think mainly the offshore oil space trading at large discounts to their replacement values and with day rates inflecting as the catalyst. So that's my big idea over the next 18 to 24 months. Uranium and precious metals, I do still have some exposure there, and I think that that they could continue to do a hockey stick in the uranium side of things, and precious metals eventually will be squeezed. I have no idea when, but I do have some exposure. My highest convictions remains around the offshore space. So with earnings coming out this week, I'll be digesting a lot of that. Here's a portfolio as it currently stands, and so largest position remains Petrobras. I still see a long, long way to go for Petrobras over the rest of this decade, and it will continue to pay me back perfectly acceptable rates of return from the dividend alone. So not touching that. It just is going to do what it does. If there's a drop in price, potentially add, but it's already 15% of the entire portfolio, and that's how I roll. Take concentrated positions, hence the volatility. Volatility is the price that we pay for outperformance, and that's my style. I found this works much better for me. it's not advice, it's just what I'm doing. So you do your own due diligence. Valaris, I've put in 10%. It was probably a little gung-ho. The execution on that could have been better, but I'm looking to move a little bit of capital away from diamonds and use some of the cash that I have. The cash is sitting at 18% of the portfolio. It's in a very good position. If we do get some downside volatility in the broad equity market, which I do think we're going to get, because let's take a look at the S&P. So you're looking at the S&P right now. It's insane, all-time highs. If we look at the RSI indicators, it's way overbought. And as I've mentioned in a previous video, if you go back 2 or 3 videos, I talk about Murphy. Sorry, dog's making noise. I talk about the earnings yield on the S&P and reverting back to somewhere where we would consider that normal. And I think you could see, I mean, a base case of 25% pullback from where we are here. So hitting that 200-day moving average, just getting back to that over the last 5 years, you're looking at around 4.85. I do believe most of that will be sold from sort of ETF redemptions and the closet index huggers in terms of institutional capital. That's where they're mainly playing. And so I think you'll see the sell-off mainly in tech, but it's highly likely that that will have some kind of carryover into positions that I own, which will be wonderful. All of you will start to question. You'll send me emails and comments and Discord questions and everything else, and I'll be buying. So just giving you a bit of a heads up there. And the other commentary really about this is, what do I think has, if ever a position to be here, I want to believe that it has the ability to at least double over the next 3 to 5 years, preferably 3. Doubling in 5 years' time is an IRR of 15%. I like to aim a little bit more towards the 20% side of things, because I'm highly concentrated, and I know that a few big winners are going to amortize the inevitable, inexplicable underperformers. So I'm looking at these types of plays. I think that the Geo Group still has another 100% on the upside here, or at least to $20 is where I would start to really scale out of that one. Uranium is an index. It's a tricky one, because I think that it is going to run, and yet I can't really justify buying any of the individual companies as of today, because you'd be discounting in very, very high uranium prices. Are they going to stay? Probably, but you just can't have that as a formula for commodities, because it's a recipe for disaster. Ecopetrol, I've trimmed a little, just because I see more upside elsewhere, and some recent political instability in Colombia around the appointment of a new attorney general has meant Colombian stocks have sold off. And in my private portfolio, I'm writing covered calls, and so that just continues to yield. So with the covered calls and the dividend yield of Ecopetrol, there's a high 20, even 30% yield over the year that I'm looking at with that. Vital Energy is completely forgotten. It's trading at a large discount to its asset value. I think there's another 2, maybe 3 times upside from here. Sibanye Stillwater, and I don't know how this is going to work out. It's extremely cheap, right at the time where palladium has just plummeted. Platinum is cheap. Russian supply is obviously out of the question there. South Africa is really the only other place that has meaningful supply. It's just South Africa, so there's a lot of risk involved. The company's net cash, it's trading at around where they issued the most recent bonds. So I really think it's hold your nose and buy time, for me personally. And so I have some exposure to Sibanye. I'm looking to also add to Sprott Physical Platinum Palladium, just because I think that the metals will do a reasonable job over the next few years. I don't think they'll double, but having a 1% to kind of stabilize, I think you could get a 20 to 30% upside over the next 12 to 24 months. And that should act as a currency or inflation debasement of the currency protection. So I am looking at that. Otherwise, for me, precious metals, they're either super levered, super cheap, super hated out of fashion, like Sibanye, or they're the best of the best. So your Franco-Nevadas and Wheatons, which I own in small positions down here, which you can see. Next up, Diamond, I've spoken about. Great, I love it. I think it could well be a multi-bagger, but I believe with Diamond, it's the man in the middle. So you either believe the thesis about offshore or you don't. If you do, you should be long rig. because all the things that were in place in 2020, in terms of the thesis in 2021, when I started talking about, they are the same or they've improved. Day rates have improved. They've pushed them debt maturities out. The issue of just putting all the eggs in the one basket is any kind of left field risk, an oil spill, something like that. So Valaris is heavy because, and I admit, and I've admitted this on Twitter, for this type of thing where I know other people are copying me, at least the balance sheet risk is not there with Valaris. It's almost net cash. They will do just fine. They have the biggest, widest range of fleets, and I think it's the sensible decision. Would I consider reducing a little bit and allocating more to rig? Yes, but I'll probably do that with Diamond because Diamond is likely to be a buyout candidate. And if that happens, you're looking at maybe a 30 or 40% premium instead of the multi-baggers, if that happens. Stoneco growing like wildfire, maintaining margins. It's not going to be a forever trade necessarily. If my friend Paddy Flood is right about changes to the Brazilian banking system, this won't last forever. But I still see another 100% on the upside from here potentially. And again, do your own due diligence. It's just me. And we have some physical uranium. Tidewater and still has talk to the upside here. It's not the trade it used to be, but it's still quite a decent trade. And I think that we can get to, who knows, maybe 5 times cash flow, and you would get a decent double from here. It remains to be seen, but I still want exposure to Tidewater with their short-term contracts. Baxam, we're waiting on the deal to be fully signed off, consummated. A couple of Middle Eastern private equity deals, private equity firms. Looks like they might even create a bidding war. There's already been an offer for $15 per ADR equivalent, which would be 100% upside from here or more. And I think that it will happen. Just waiting for news. And so we'll see. Worst comes to worst, it's one of the world's biggest, largest chemical companies trading in the lowest of its ranges. A very wild, very volatile beast. But I think it's too important of a company for the world to do without. So even though it is indebted and it does still have some of those issues around the town that they sank, and hopefully they fired their geologists for that one. I think it's going to get there, and I think that it's a pure deal arbitrage play. Scorpio, $90 is what I'm looking for there. Looking to add into DHT because I think it doesn't have the same torque, but longer term crude carriers, it just has the best, simplest setup. Product tankers are a little bit quicker to come onto the market. So that would be the only thing. Eventually Scorpio will have an increase in fleet size. I think that is going to take a lot longer for the likes of DHT or other pure plays on crude oil carriers instead of product carriers because of the current fleet situation. Whitehaven, I didn't go all in when everyone was crazy. I still think it's a long-term good deal. They've had some production issues and cost overruns. I think cost inflation will continue to hurt them, but coal's got such a moat, and particularly Whitehaven's type of coal has such a moat. Long-term, I think they'll be fine. And I'm hoping things really, it's going to be tight to get to the deal. They may have a little bit of a funding gap, but they'll be able to sell back about 20% of the Blackwater mine, I believe, to come up with the extra 600 mil they need to cash cover the deal. And then from there, you'll look at probably a year's worth of no return to shareholders to pay off the acquisition price again. What I'm hoping for is that the thing just tanks over that year. I hope that people get bored with it, and I'll start to load the boat. I have a starter position, and I think that over the long term, buying it at this price, you're looking at about twice, or in the sevens, you're looking maybe twice the EBITDA for a company with 30, let's say, being conservative, plus years of production. And that's how I look at it. Transocean, I've spoken about quite a bit recently. Franco could possibly be one of the talkiest names in gold. It's crazy. They have a lot of future production for which is not being accounted. And it's kind of crazy to say it, but if you do believe in those high gold prices, I think a hell of a lot of that is going to drop to the bottom line of Franco. And so why take the extra risk when historically in periods of inflation, royalty companies have outperformed straight producers and outperformed the metal. So there's a strong argument for that, even though it looks quite expensive when you are paying up for it. Around $100, I think there's worse things you could do. Wheaton, same play. I think more upside to Wheaton. Peabody started position. Alibaba started position, keeping an eye on what's happening in China. That will be a separate video. And then Brazil and ETF, just to keep an eye on things, emerging market play. British American Tobacco, just a long-term value starter position. Pan American, talky name, really deep value potentially, but I need to do a bit more work before I put any more of the funds into it. Patterson Energy and other oil services, mainly focused on shore. So that's that part of it. What else did I want to talk about? Talking about SPX, we've done. Let's take a look at the gold price. It's pretty crazy if you look at over the last 5 years or so, ignoring the ads, gold is still up 34%. I mean, people are getting bored with it. It still hasn't been terrible. It's done its job in terms of protecting purchasing power. And if you look at, what is it? Let's say you gold in Aussie dollars, gold spot. And let's take a look. So gold in Aussie dollars up. I'll do a rolling 12-month so you can get an idea how. So gold quoted in USD, 9.9%. This is much closer to what I think is the real rate of inflation. This is what I personally use. So we're talking about property acquisitions. Do I buy in cash as a way of shorting the Aussie dollar, on which I'm pretty bearish? Or there's an argument to say, well, look, forget about my previous biases and why I sold real estate in the first place. If I'm bearish on the dollar, I want to short the dollar. This is a pretty good way to do it. So you could put some leverage on it. 16% true rate of inflation as measured by the gold increase over the last year in Australia, even though it's quoted at whatever the CPI is quoted at. If I'm going to borrow at, I'll probably get 5%, some a good debtor, then essentially there's almost an 11% carry in terms of a real rate. If you look at the nominal rate minus the rate of inflation, I'm getting ahead by borrowing in that case, as long as I obviously use the money judiciously, all else being equal. And there's a strong argument to short the dollar via buying a property where I can do what I want with it. I can live in there, deck it out, renovate it, and rent it if I decide to live overseas. And then I've got this nice little carry here where I'm earning some cash flow. The Aussie dollar won't do well, but I still think it's going to do better than the Argentine peso, at least for the next few years. Better than the Colombian peso, and probably not better than the Mexican, that's for sure. But at least those two places where I could see myself spending some time, it's free carry on free carry, at least at the moment. So that's that, guys. I hope you enjoyed it. Any questions, obviously, leave them in the comments section. Otherwise, take care. Oh, that's right. I was going to answer some questions. I always get sidetracked. So, the Warren Buffett spreadsheet is asking about Joy. Did I sell Journey Energy? No, I didn't sell Journey Energy. And you're asking why it's not in the eToro portfolio. Easy, because the Canadian stocks are not listed in eToro. Journey Energy is a Canadian small cap. I'm extremely bullish on the company. It's trading for a couple. Let's have a look. Why not? It's trading for, I think, about 200 mil market cap. And I think the power gen business alone is probably worth around 400. So the answer is yes. Still long, had some production issues. Always happens. 32% down on the year. Okay. P50, and let me take the gold out of there. So we're in that bottom of the buying range, which if you saw my previous video is where I'm looking to scale in. So I am adding to Journey Energy. And what else can I say? Let's take a look so you can see in one fell swoop what I'm thinking. Journey Energy, we're talking Canadian. Yeah, so a couple of 100 mil enterprise value, 270 million enterprise value. And I think that trading at 2/3 of book value, I think that this thing has a long, long way to go. Its reserves value, and depending on your oil price, easily many multiples from here. $12, $14 is not out of the question. So that's my answer to Journey, sir. And do you have a private portfolio? Yes, I do. It's basically, yeah, it does mirror the eToro portfolio quite a bit, but obviously if the stock is not listed on the brokerage of eToro, I have to start looking elsewhere. Okay, guys, I'm going to wrap it up here. I'm going to go inside, starting to get dark. All the best, and I look forward to catching you in another video shortly.